Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Wednesday, January 29th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn up 6 1/4, 491 1/2. March soybeans were up 7 3/4 at 1052 3/4, and March Chicago wheat was up 6 1/4 at 551 1/2. No export sales announcements here this morning, so we'll jump right in. It should be a pretty busy day on the news front again. We've got RFK on Capitol Hill going through his advising consent. Obviously he's had a number of things in his crosshairs. So the questioning should be pretty interesting there. Fed decision at 1 o'clock Central. Not looking for anything major, but always the forward guidance is interesting to note. But outside of that, yeah, it looks like from a grain side, guys, a little drier this morning in Argentina. Brazil not looking as bad, but we'll see what everybody thinks here. Dustin, give us a few thoughts to start the morning, and then we'll throw it around the room.
The trend is intact. I think, new highs in the Brazilian real are a big thing too to continue to watch. We kind of backed off that a little bit here today as the dollar just continues to march higher again. Entering a very critical time, we've got the threat of how tariff reactions could be, kind of next week, next month. I really am just kind of happy to see this rally and think this is actually providing some opportunities for once. So I'm not trying to overthink it too much, just trying to say, hey, this is a time for maybe some adjustments on the marketing side, because it's the highest price we've been at since June of 2024 for new crop corn and old crop corn. So that's kind of where I'm at when I see this rally. I'm thinking, let's get some security for the year ahead.
Yeah, and it's amazing. You got a couple of days, and next week we're going to start setting spring crop insurance prices. For a majority of guys that buy crop insurance. So time flies, but we've hammered on it a number of times. Just the amount of deep diving that's necessary this year with some of the newer products and subsidies and things like that. It's the numbers that we're running and matrices that we're looking at. There's a path here to doing some pretty good risk management and mitigation early in the season. Based on some of these products. Dustin, maybe a few thoughts there.
Yeah. So, when you're talking about like ways to hedge, like, when I say, start getting some protections in place, it's not necessarily like, oh, just sell all your crop and be done with the year, right? Like there's a million shades of gray between doing nothing and, going all the way into a sold position. You talk about crop insurance subsidies going up, some of these larger, policies, lower deductible policies, some of the private products that can go with it. Some of your best dollars of coverage for actually protecting revenue, it does blend into the marketing side. Buying a higher level insurance policy may result in different changes that you would do on the marketing side that maybe back away from just the straight sale that you would normally do. So when you talk about best dollars spent for potential outcomes, because it could be a drought year, could be, a really good growing season, and we go back down into the threes. Best dollars spent probably need to start at the crop insurance, I would say, for most growers. I mean, there's certain situations where it might not make sense to go up on these higher level policies, but I think most growers probably should be considering these as part of their marketing plan, which is not typical. A lot of people will just simply buy crop insurance separate of their marketing plan, and we don't think that at all.
Yeah, and the things we're seeing too, it's kind of interesting. Like folks that haven't done a deep dive or an audit into, unit structures and setups and things like that. It's just one of those things that it is a prudent play to have, a set of eyes, take a look at things and go through it deeper to make sure you're maximizing all these programs, especially in tight margined years like we're seeing.
Yeah, I mean, there's definitely ways to, like when you're talking about how you go about buying enterprise or optional units, like structuring unit structure differently. You start going into like, some of these band products that you have where, let's just give an example. You buy a band product that's got a 10% band. One unit has a huge drawdown on the county, 30% revenue drawdown, and another unit has no drawdown. That's a 15% loss, which may trigger a band payment. But the way these work is you only get a 10% band payment on that particular unit, right? So that's only a 5% payment as the whole county is concerned. So there's ways to structure that you can still go down those routes where you say, hey, I want lower deductible policies, meaning, I make insurance a bigger portion of my protection. You have to really think a little bit more clearly about unit structure, to your point. Because if you want the security of actually getting that 10% payment, and you have a lot of variability on revenue losses because one part of the county got hit with weather, let's say an individual peril like hail, and the other part didn't, you have to be set up in the right spot to make sure you're still covered in the whole.
Yeah, very good.
I was just going to say, as we've gotten more and more into this over the years, it's obvious that most crop insurance is kind of, viewed as like home insurance or life insurance. It's like, what's the cheap way? And this goes all the way to the agent level, just the education on how these things work and how to use them in a marketing plan or how to maximize the value. A lot of people sell just on like, how much do you want to spend? Right? Kind of like going to a car and be like, hey, do you want a 7-year loan? Like what's your monthly payment versus like the value you get or the real cost or, what that means for marketing or how to leverage it. It's just been very obvious that very few in the industry understand it. So, they'll tailor something to the cost that you want to spend, but not really understand the value of it or how to use it. So,
well, let's kind of dive deeper on that too, Justin, because you say, well, what's the, you get what you pay for, yes, but like, and then they turn around, they go right back to their marketing guy and they say, well, should I sell 50% of my crop this year? Should I sell 60%? And those two really are in the same exact question because you're like, well, no, if you brought your deductible to only 5% revenue loss, right? And then, you're not buying that put option to get up to that 60% or 70%. You're not having to sell as aggressively. In a low margin environment year, when some of these banded products are associated to a higher subsidy, and we've got some major forecasters talking about long-term drought potential are elevated this year. I don't necessarily buy into long-term forecasting, but the guy that ends up selling 60-70% because he's got into the third year of a bear market and he's convinced that he needs the market is going to really regret that decision if we do have a drought. Right. And that's part of that balance of going into a year of saying, well, what are all the tools I can do? It's not just about selling aggressively when we get a rally like this. Maybe it's protecting revenue by insuring that revenue and then allowing some of that upside to be freely floating higher in case of a
well, there's a reason, right? Like, this, to your point, like these things are expensive, but when they're subsidized so heavily, like because that's the true value, it is much, much higher. Right? Because of all those opportunities that provide you. Like not only does having a weak policy, like not protect you on the downside, it handcuffs you on the upside too. So when you do have a weather scare or a yield scare, usually kind of coincide, obviously, you can't be as aggressive against that policy when you have a weak one, and you have to be more aggressive on a down market than you should be. So there's, that just kind of goes to the lack of understanding from like someone that, doesn't understand markets or how, options are valued or risk is valued. And it's just selling, it's not the same as selling car insurance, right. But it's been kind of commoditized where, so many people got into crop insurance the last 10, 20 years just to offer it without really understanding it. So it's a huge difference. And we've done a, big deep dive. A lot of it's been just because of our clients and the software and having to understand how it all works. But you realize as the more and more you dive into it over the years and how it works, like all the French benefits that you get from having those that you can get on your marketing.
Yeah.
Huge 100%. Difference.
Yeah. And I can see like why it's evolved, right? If you're buying a 75% policy, of course you're going to have to market with that. Prices don't drop 25% in a vacuum, and usually when they do, it's corresponding with higher yield. So you're unlikely to see that being a big portion of your marketing tool, a 75% RP policy, or even an 85% RP policy for that matter. Everyone kind of knows they need to market on top of that, but you start getting into going beyond 85%. Now we're talking about actual blending into the marketing world.
Yeah, it's kind of like this. You kind of get that saying on the street, like, "Oh, most options expire worthless." Well, yeah, that's just like obvious, but it doesn't really say that they're worthless. It's like if you don't know how to use them, you could say they're worthless. Right. That's assuming you know where we're going to expire at. The 90% do. That's a stupid stat, right? It's kind of like insurance trying to look at insurance of like chance of a payout.
Yeah.
It's like chance of a payout if you don't do anything else and use it the right way. Two big differences.
Absolutely.
Yeah, very good.
That's our skill on insurance. Yeah.
Yeah. It won't be the last time.
What's the other question? Yeah.
Jace, give us some thoughts on what you're seeing, market wise, talking to a lot of clients and stuff like that. What are your thoughts this morning?
Yeah, Dan, I think a lot of conversations about crop insurance, right? Trying to pick the right policy has been going through that with a lot of guys. I think a lot of guys have taken advantage of this rally, right? Been selling into it. And, I think just risk management, re-owning into the summer in case there's a weather market. It's acting really good, right? We've talked a lot about this on the show. I agree with, everything Justin and Dustin have been saying over the last few weeks, right? It's the setup for corn to stay strong for the next couple months into the spring, possibly a weather event into the summer, I think is, be really good for the industry. That's kind of where my head is, but it's, take it day by day. So, beans are struggling more. I mean, if you're just looking at the price reaction of corn and beans, and you can tell that corn's definitely acting better, and there's seems to be a better bull story in the corn market. So if you're, taking out all the other kind of marketing stuff with crop insurance, and if you're kind of just looking at it from price action, I think beans, are a better selling opportunity if you're going to sell one crop or the other. So, hey, Dan, I'm not seeing a whole lot of new stuff. It's kind of, there's a lot going on with, rhetoric out of this new administration. A tweet tomorrow can make this whole thing look a lot different than does today, right? In the good and the bad. So I think you just have to, I think you have to just look at this market and say, look, it could break $1. It could rally $1. If we have a narrative of we think it should stay strong, right? You can set yourself up to take advantage of that, but you always got to look at the other side and say, well, what happens if there is a big trade war and, we're not pricing that in yet and funds are super long, and you always got to look at that side of the equation. That's where you really get hurt, obviously. Right. So.
Sure. Well, and Justin, to that point, this 45Z being in the crosshairs of this freeze that Trump was looking to do across all these different government programs. Obviously, it's going to be a court battle, but you see oil a little lower and whatnot, but that's going to potentially be pretty volatile as we keep trucking here.
Yeah, I do think we've traded a lot of these things. Mm-hmm. Soybean oil was at 90 cents a pound, right? At the height of the biodiesel expansion, we're at 45. Corn is, a lot of these things like, oh, Trump tariffs, like we've sold that a lot of times. I mean, since he's been, since he won, right? It was, oh my God, we're going to go to zero. There's a lot of talking heads out there about how bearish things are, how bad Trump's for agriculture. So it's not like we haven't thought about that, or there hasn't been some of that built in. Now, obviously, he could do something that completely changes that, but I'm just not on the opinion that his main motive is to destroy agriculture, personally. So, we'll see. I mean, we traded. Monday, right, down sharply. Colombia. I don't know how many people had to tell me that Colombia is a number 3 importer, and so we traded all that, right? So yeah, it's the wall of worry right now, and we're clawing back from. I was talking to somebody yesterday about this, where if you look at like let's say corn and soybeans, 80% of the time you're in this really difficult range of like just above or below profitability, right? And the hardest parts when you're way above profitability, like we had, 21, 22, a lot of people don't sell because like, why do I? I'm so far in the green, I don't need to. And then conversely, when you're in the low threes, it's like, I can't sell because I'm so far in the red, right? It's these moments here where you got to get creative and there's opportunities. But we're back into that, right? We're coming from so deep in the red that now we're back into like where you can start make things work or there's opportunities. So like Jason said, it's exciting to be in this situation. It's very difficult, right? Because now you're like, what do I do? Do I sell it, lock in a break even, hope for the best, like survive 1 year? And I think the answer is yes to, doing the work right now and figuring out all those things that we talked about earlier. Because now we're in that zone where, okay, like it can't be lazy here. If you do the work, there's some opportunity, and you could set yourself up for really exciting things if they happen. If Argentina stays dry, so all these things we keep talking about on the show, but it's not hard to paint a picture where things could get exciting. And also, it could go the other way. Obviously, if we start raining in Argentina, dries out in Brazil, get safrinha crop planted, gain 3 million corn acres here. Like there's all, you can write all the scenarios down, but the beauty is there's tools there that you don't have to know where the market's going to know the results. So
very, very good. We're got a minute here, Ryland. Real quick, cattle just doesn't seem to be phased by anything. We keep trucking higher, and April hogs are staring at new highs. So what's your thoughts this morning?
Yeah, no, it's been a big move for sure. New record highs in cattle. I mean, I think everybody's just kind of looking at like this thing is really overbought. We're due for some kind of correction here. What's going to finally do it? But right now, there isn't any bad news. We haven't really gotten a glimpse of cash this week, but I think expectations are still for steady higher trade pretty much across the board. We got the inventory report on Friday, so if there's anybody that's really caught this move on the spec side, I wouldn't be surprised to see any kind of profit taking into it just in case. But even so, the inventory report is still expected to be pretty friendly, I think, in the long term, just with the market expecting contraction here still. So overall, just like I said, feels like we're kind of due for a correction. It's $11 at 5 days, on the price. Anybody that's been short this market from the producer standpoint is likely feeling the sting of the margin exposure. So I think you got a little bit of that kind of working out of the market as well. So yeah, it should just be a pretty volatile trade, after this move. But on the hog side, yeah, I mean, we're everything kind of looks kind of seasonally nominal. We're kind of moving in the right direction. Cash market's kind of leading this. Cash was up almost $4 yesterday, and bellies were up $4.35. So it just seems like there's a lot more confidence that we're going to see prices continue to improve. We hit new contract highs in June yesterday and in a couple of deferred contract months. So it does look like open interest increasing on here. So I think we are seeing a little bit more spec buying as well as producer hedging. So all's well and good. The trend is up. Trend is your friend, and there really has not been any bad news on the meat side so far. So we'll see if the tariff details kind of dig into any of this, but I think just the idea that Colombia is going to set the precedent right now and just what happened just last week is going to keep the bulls pretty emboldened right now. So we'll see how it shapes up, but waiting for cash.
Very good. Appreciate the update. Just came into the open here. March corn up 7 3/4. 493 is the last. March soybeans are up 8.5, 1053.5. And March Chicago wheat's up 7.5 at 552 3/4. Again, just a couple things to point out. Fed will be out with a decision here at 1 o'clock Central. Not expecting rate cuts here today, but we'll keep an eye on the forward guidance. Weekly export sales, they'll be out tomorrow morning, 7:30 Central. We'll talk about those in the war room. And also, stay tuned after the show. Jack has some details on a special that we're offering here through April 1st for folks that want to give AgYield a shot and talk about a lot of the things that we talk about on a daily basis and maybe dig a little deeper for your operation. So with that, any questions or thoughts that folks have, please don't hesitate to give us a call. We love visiting about this stuff and seeing if we can help you out there. Also, appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It'll keep you up to speed on everything that's going on with AgYield. Doesn't cost you anything to do so. So again, thanks for supporting the show. We're doing this live every day that the markets are open, streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments there this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.